Today, ESG is no longer fringe, it has become mainstream. And therefore, over the last years, the rise of sustainability and responsibility has drawn considerable attention by the entire society, including businesses. In India, companies have integrated corporate social responsibility into their business model as a kind of self regulation. And the way businesses invest has led to socially responsible investing. But it is nowadays accepted that environmental, social, and governance matters cover all the sustainability and responsibility topics and what exactly should be focused on. The panel will discuss alternative funds' perspectives on their role in value creation, as well as it being almost a moral and business obligation to monitor and deliver on the ESG standards. With that, I welcome Nishit Desai, founder of the namesake firm Nishit Desai Associates, who would be moderating this session. We have Anita Marangoli George, who till recently was with CDPQ, but is in the process of raising her own sustainability fund. My good friend Anjali Bansal, founder of Vana Capital. Dhanpal Javeri, Vice Chairman, Everstone Group and CEO, Eversource Capital. Dr. Mukund Rajan, Chairman, eCube Investment Advisors. Dr. Vikram Popli, Director of Investments, Leapfrog. And Prajna Khanna, Chief Sustainability Officer, Process. With that, I pass it on to Nishit Desai to start the session. Thank you.
Nishit, I think you're on mute.
Nishit bhai, you're on mute. We can't hear you.
Yeah, sorry. I'm really sorry. I was on mute. I was talking. That's what usually happens. People mute me when I want to make a point. But thank you. I'm delighted that all of you are here this afternoon on this ESG panel, and which has really got tremendous traction at this point in time. And what I wanted to do was to, I think, while brief introduction has been given, but if each one of you can take about 30 seconds to tell a little bit about what you are doing and what you thought, so then people will have a better understanding of your background, so they can relate with whatever you say. And I would be grateful if you could just tell a little bit about, So Anita, can we start? I can see you first on the picture, so I'm taking that round. Maybe the order may be a little bit here and there, but I think it would be nice if you can tell a little bit about yourself. You've been with CDPQ and all that, but it would be good for people to hear from you.
Thank you very much, Nishit bhai. Hello to everybody on the panel, my fellow ESG supporters, as well as the audience. I'm Anita George, and I've worked with institutions for practically all my career of 25 years. So first with the IFC and World Bank Group, and more recently with CDPQ. And now I'm actually venturing out on my own to set up a sustainability fund. ESG is a topic, and I would say a way of doing business that I've followed, and I've been fortunate to be in institutions that have been pioneers in this area. And I hope to continue doing that going forward. Thank you.
Anjali, you have a tremendous background. I know you've been a women leader and chairing so many institutions of repute, and your passion for ESG, I know, has been tremendous. So I think if you can tell a little bit about yourself.
Thank you, Nishit bhai, and delighted to be here, of course, on the IBCA platform as always. So I founded and I run Avana Capital. It's an early stage VC focused on technology and innovation that drives large climate action and sustainability outcomes. We are a commercial returns fund, and we strongly believe that ESG is no longer a narrow vertical that should sit in CSR and is social good, but it's actually the next big opportunity. What digitization was for the last 20 years, sustainability will actually be for the next 20. It is critically important not just to save the planet, but really for survival and sustainability, and frankly, competitive advantage for businesses as well. So that's what we do.
Nishit, you're on mute.
I'm sorry. Okay, maybe let us Vikram.
Sure. Thanks, Nishit Bhai. Thanks to the IBCA team for having me being part of this esteemed panel. I'm an orthopedic surgeon by qualification and then moved on to the investing world, having part of the private equity industry for the past 10 years. I'm here representing Leapfrog, one of the pioneers in the impact investment space. Our motto is profit with purpose, and it's our endeavor to marry the both so to make a better world going forward.
Thank you. Mukund.
Yeah, hi, this is Mukund Rajan. I chair a ESG-focused platform called EQ. The name is drawn from three E's: engage and empower for ESG. This is after a 23-year career with the Tata Group, where I was the brand custodian and chair of the Tata Global Sustainability Council. I have recently authored a book on ESG, which my publisher still views the first book on ESG in India. It's called Outlast: How ESG Can Benefit Your Business.
In fact, you talked a lot about politics of environment, I believe.
That was the first book I wrote after my
well
doctoral dissertation 20 years back.
No, some things are not easily forgotten. They become relevant after 20 years,
Correct.
When you talked about at that point of time, I think very, a few people thought about it and talked about it, So you have been pioneers in that sense, Okay. And Dhanpal, wonderful.
Thank you, Nishit Bhai. Thank you, IBCA, and real pleasure to be here on this panel with lots of friends over here. I'm Dhanpal Javeri. I'm Vice Chairman for Everstone Group, and I also lead the Everstone Climate Impact platform called Eversource Capital, which we co-founded along with one of the global renewable energy companies called Lightsource BP. It's a part of, I would say, a journey that we started sometime in the early 2013-14 period with some of our LPs, such as IFC and others who came on board in our private equity funds. And that's how we really got seeped into the world of building sustainable businesses across all our private capital strategies. And since that journey, I think it's culminated today in Eversource Capital having raised India's and maybe one of the largest single country emerging market climate funds, where we closed at about 750 million. And the idea is to invest across 6 primary and 2 secondary of the 17 sustainable goals of the UN.
And Pragna.
Thank you. Thank you for having me. It's the first time I'm joining, and I'm representing Process. For some of you who may not know Process, we're one of the largest tech investors in the world with African roots, but a global vocation, where we invest primarily in asset-light very, very carbon-friendly business models. So digital technology platforms in high-growth economies, everywhere from Latin America to Southeast Asia, Central and Eastern Europe, and very much a strong focus on India. I head up sustainability for us. What that means is essentially integrating ESG considerations into the entire investment decision process, the engagement process post-investment, and also now increasingly carving out a very ESG mandated, sustainability themed investment strategy from an opportunity lens. So that's we're headquartered in the Netherlands. I'm really grateful to be invited, and thank you for the opportunity.
So I think let's start on a simple note, and I will pick one of you, just to react to some of the things that we are going to talk about. But there are a lot of people who are now beginning to get a sense of ESG, but still, a lot of people need to understand what the ESG is about. So maybe, can I ask Mukund, can you explain what is ESG in simple words, and why it suddenly got a traction uh, at this point in time? After 20 years, you spoke about it. About two-thirds of
Sure,
a generation. You know, 30 years makes a generation. So I said 20 years ago was about, previous generation. And you talked. So I would be delighted, and all our audience will be very happy to hear you giving some introduction and what's happening around.
sure, sure. So, as you rightly said, ESG is a term that's been, around for a while. It was probably first coined, in the early 2000s, but it's really entered the lexicon in a big way in perhaps just the past couple of years. So, for the audience, none of the panelists need this, but for the audience, the E in ESG or environment really encapsulates the natural resources businesses consume, the pollution that gets generated, carbon emissions that get generated, and many other environmental impacts. The S or social typically refers to the links and ties that businesses develop with the local community, the way they treat their own people, their employees, their focus on issues such as diversity and inclusion. And the G or governance deals typically with issues such as board effectiveness protocols, audit controls, appropriate reliance on independent directors, and so on. Now, when you take these issues together, they really are speaking directly to the whole notion of corporate responsibility. And they are seen, as Anjali just mentioned, to critically influence the sustainability of businesses. So they impact both the risks that businesses face and also throw up possible opportunities that lie ahead. And since risk and opportunity are all about what private equity and venture capital investors care about, therefore the interest in ESG. Now, there are a range of ESG issues. You have an ESG ratings provider in India, for instance, that claims to track over 700 input data feeds across a range of ESG issues. This is where the concept of materiality then becomes important. So you don't need to churn the ocean to understand how a business is doing on ESG. You need to look at the specific ESG issues that impact the particular vertical in which your business operates. So some ESG issues are more important than others for different kinds of companies. Take an issue like climate change, may be very important for a steel manufacturer in terms of carbon emissions, but perhaps not in the same way, at least in terms of carbon emissions. Let's say if you're an IT services provider doing web design, for instance. A wide variety of stakeholders are now picking up on each of these issues in different ways. Customers respond differently, local communities respond differently, the judiciary is seized of issues such as air pollution in India. But perhaps the greatest impact that we're now seeing is really coming from the investment community. One data point, funds that control over $120 trillion of investments around the world have now subscribed to what are called the United Nations Principles for Responsible Investment, which is committed to really introducing ESG principles in the way investments are analyzed and prosecuted. So that tells you the kind of interest that is coming from the investment community. Why is it changed now? I think there are a bunch of convergent trends that have been building up over time. Greater awareness, the use of social media, better science behind issues like climate change. But I think some of the shocks that the world has experienced in the last few years, particularly the pandemic, and also some of the extreme climatic events we've started seeing, I think a big part of the explanation for why this issue is now sort of on center stage and why it wasn't perhaps 10 years back.
I think you made a reference to risks. And even as a lawyer, we see there are a lot of risks now they are going to be emerging in the coming times, because we have seen globally so much of litigation happening, and the stakeholders are no longer the shareholders, but even other stakeholders. So public has a direct participation. Human rights are getting more and more entrenched. Many other things which board of directors need to be very mindful. The important question for this particular webinar or conference that we are having today, I think we should also bear in mind that what kind of risk would emerge on the GPs and LPs? What is their responsibility? If there is no compliance with ESG, which has become inherent, even part of regulation in many ways. You know, and if that's not compliant, then you have aided or abetted, even after knowing sort of things that are wrong. What kind of risk could arise? That is what we are, we have seen a lot of cases around the world, though in India it has not happened so much. But we see that in the coming times, maybe private equity people, LPs, others may be, brought into a lawsuit for what is called aiding and abetting. And one will have to be very careful as to where to draw line. Because in England, for example, what has happened is that when investment happen in developing jurisdiction or poor economy, and ESG was not compliant, okay, normally the liability of that company is limited to that particular company, a subsidiary company. But now theory has emerged, and you must be aware of that, that, even the parent company has an obligation to see their policies of the subsidiary companies are such that they comply. So liability, courts have held that liability cannot be shirked away by the parent company saying that it's a separate limited company which has committed a wrong or it is not compliant and stuff like that. So I think that's very important part that we need to see, and public interest litigation would be in offering. I believe in next 5 to 10 years we'll begin to see that. So we need to be very mindful of that, and same as for directors as well, because now we all know we don't need to talk more about it. But let me just go to maybe Anita. Uh, would you like to say a few words?
Sure, thank you. And I fully agree with you, Nishita. In fact, the conversations we are hearing post COP26 and the proliferation of lot of investors, mainstream investors claiming to be ESG investors, there's been accusations flinging around on greenwashing and this and such like. So I think the importance of really being able to stand behind investments that you claim to be green and ESG compliant has gone up much more given the amount of capital coming together. So, from an institutional investor perspective, the one thing I would say is that it's not only individual pension funds or insurance companies that are paying a lot of attention to ESG, but also they are coalescing together. So, among, for example, the Canadian investors, pension funds, we have something called Maple 8, which brings together all 8 Canadian pension funds accounting for more than 2 trillion of AUM, who are specifying what is expected of investee companies and funds in which they are LPs. And the attention now is encompassing not just public companies, but also private companies, both direct investments as well as fund investments. So I think as far as the requirements of capital go, it's becoming more and more not just a nice to have, but a must have, and almost a precondition before going in. The one thing I would say, which Mukund and I had an opportunity to chat about yesterday, is that obviously, business has been going on for many years, and these ESG requirements, some of them cannot be attained overnight. So one has to also lay out a path for companies to transform themselves truly in a way where the operations and strategies genuinely reflect their ESG ambitions. So I'll stop there.
Uh, Anita, I know that at CDPQ you focused on S of the E. I think Mukund spoke about E a little bit more. I'm curious to, know how deep an LP would go into, because I know now all the LPs, especially the sophisticated ones and the, do incorporate conditions about ESG, in the portfolio companies. But how deep do you all go into examining them, and what do you do? Because you get a lot of reports. For example, when you invest in a fund and fund invest in a company which is, say, let's say in a cosmetic company, okay, just not to pick any one or two. Cosmetics uses mica a lot. Mica mining engages a lot of child labor. Now what I'm trying to understand is how deep do you expect GPs to go into the supply chain in that sense? And do you look at the industry and try to identify that these industries have peculiar problems, like mining has certain problems, some other companies have a different problem, so do you give guidance to the GPs that particularly try to look into this aspect, or usually you say this is a form, you get it filled up and be done with that? Just trying to
Yes.
trigger a little debate.
No, absolutely. And I think it's an evolution and a process. So, definitely, given that large institutions have to have their, firstly, publicly stated targets in terms of all three, E, S, and G. And I can focus a little bit on the S since you asked. Secondly, for most serious institutions, this is verified by third parties. So it's not just you looking at yourself. But I would say that's the starting point for all LPs and large investors, is really shining the light on yourself. And let me share with you, and this links to the S part. So in CDPQ, we had very clear targets on climate, on diversity and inclusion, as well as on governance. So each and every one of us, our variable pay was linked to the performance, our performance against those targets. So very soon, the entire organization, from the youngest or junior most analysts to the CEO, gets aligned around really performing against those targets. So that's the inward focus. Also on S, where diversity is a big issue, when we shone the light on ourselves, even though we had 30% as women, which in the investment world is a good number, unfortunately, it's a good number, we found that in key decision making, like investment committees, we just had 7%. So the first focus was, how do we get ourselves in shape? Because if we are going to preach to our GPs and our investee companies, we better be sure that we are on a solid footing. The second thing we did, mainly to learn and to get better at evaluating the S and measuring the S and reporting on the S, we created a $200 million fund to look at investments and companies that actually follow the parameters around S. And by doing so, we are really learning. And again, I'll mention the point that very often when companies come to access the fund, they cannot show that they're compliant. What we took a decision that we would actually help companies to become compliant. And so we give them a 5-year period with milestones on an annual basis. On the actual parameters, we've borrowed from everybody. So from the IFC's performance standards, where they have things like child labor, as you mentioned, living conditions, livelihoods, etc., as well as on diversity on boards, diversity in senior management. So our social fund is called 25 to the power of 3, which is that at the management, board, and shareholder level, there should be at least 25% of diversity. And diversity not just defined as gender, but as all kinds of diversity. So we have the Sustainable Standards Board that has come up, which is now based in Montreal, which is actually also defining how the S should be. The last thing I'll mention is Indian industry, especially post the pandemic. Some of them, the leading ones, have come together and created a social compact where they have way in which to evaluate how companies are treating not just their own direct employees, but also what you mentioned, the entire supply chain, because there's a lot of subcontracting that happens in these projects. And on supply chains, I think all large procurers are going to have to look not just at their own operations, but also their supply chains. And that's going to bring the pressure from big companies also onto small and medium companies. So this is serious, it's real, and it's money talks. So there's a lot of capital coming behind this.
Thank you so much, Anita. And maybe Ashley, can I turn to you now? Yeah, thank you. You got huge experience on sitting on boards of most respected companies. And of course, also now you're nurturing a lot of startups. And how are their boards, because these are small companies, how they manage and how do you see them, nurturing this ESG from the beginning? Because I think it's a cultural issue as well. And how do you nurture them? And I have a lot of questions for you, but I think let me start with one that is on
Sure.
the top of mind.
I'll pick up where Anita left off, really, and
Yeah.
she sort of laid it out so beautifully. Let me first put the large company board member hat on. And whereas ESG used to be a matter of risk, even a few years ago, it was to make sure you're not polluting, you're not being exposed to a lawsuit. So it was all around managing risk and managing the downside. Then it started becoming a matter for the stakeholder committee, which is because your shareholders, the large global institutional investors, started questioning as to how are you being responsible. And while yes, if you're a financial services firm or a IT services firm, you may not have a carbon footprint, but the world still needs steel and commodities and power and mining. So the hard to abate industries, cement, etc., included. You can't wish it away. You will have the nature of business is such that it creates a carbon footprint. The world cannot do without it. Then how do you abate it? So then it became a stakeholder relationship committee issue. Then they realized that actually, and I see it as kind of the 3 C's have spoken. Capital was the first to speak. Big capital, big voice, big movements in stock price, because large, institutional investors like a BlackRock or the big pension funds, and Anita's included, and so on, they started kind of really wielding their power in the right way. Then the consumers spoke. So the second C happened. Consumers said, hey, we want to actually consume from more responsible companies. If you're a pollutant, not really interested in dealing with you. Third C is the community, including suppliers and more recently, particularly employees. When you are facing a global shortage on talent, particularly the younger population, they're acutely conscious of wanting to work with purpose-led companies. And this is not to say that they're not profitable. In fact, some of the most profitable, successful companies, commercially successful companies, are also purpose-led. I sit on a couple of Tata boards. Mukund has spent so many years there. And that's a great example, right? It doesn't have to be profit or purpose. You don't have to make the trade-off. So now let me bring that. So I think boards today, this is a matter of strategy. It is not CSR. It is not culture. It is actually embedded in business strategy. So it's a business horizontal, like I said earlier, like digitization is. Let me come to the startup world. I think in the startup world, what we are seeing is that, and Shubha, it's not really, I wouldn't say it's a board matter per se, because startup boards are typically shareholder boards. And it is what shareholders want. So there are 2 types. We, for example, look at 4 areas where we think have the largest climate impact, because that's our investment strategy for Avana. It's not a nice to have. That is fundamentally what we invest in. So we invest in food and consumption, mobility and supply chain, financial and digital enablers, as well as now increasingly energy and resource management. So we look at companies that are creating technology-led solutions that address in these 4 sectors. These 4 sectors constitute about 90% of India's emissions. India is the 3rd largest emitter in the world. So we cannot achieve a global climate positive outcome without India playing a critical role. At the same time, we do not have a simple people-planet trade-off. Right? Because it's not a trade-off. We still are growing. We still have to bring millions out of poverty. Economic growth has to continue. So consequently, there has to be the right balance between people, planet, and profit. Startups provide a lot of the solutions through tech and innovation, which large companies will eventually adopt into their processes. Consumer will adopt as their consumption, whether it is food supply chain, or it is digitization. So we look at this sort of in four ways, and not as board members, but as part of our investment strategy. Taking the COP framework that Anita mentioned earlier, we look at mitigation, adaptation, and resilience and see how every investment of ours actually meets some of these goals. And there are very clear business models that actually achieve some of these goals. But I can talk more about that later.
I must say that you are a mind reader. I was going to ask you some questions. So how do you work around balancing the commercial returns, which you do excellently well, at the same time integrating ESG into your business model? And you really said, to start with, about on the consumer, I understand, and you are better at numbers, but my understanding is that today 87% of the consumers look at the products that are having some kind of environmental or good sense in it, compared to 66%, which was about 5 years ago, and compared to even half than that 5 years ago. So in 10 years, there's been a lot of movement in consumer behavior as well. And I also understand that even the investor behavior obviously drives the consumer, right? I think you responded very well. You understood I was going to ask you some of these questions, but it's wonderful. Let me, uh, Vikram, would you like to say something? And, it would be nice to hear.
Sure. So, just continuing on Anjali's point, so in terms of acceptance of ESG, more than acceptance, what we see even in the startup world and some of the smaller companies is more resonance towards ESG. Most of these entrepreneurs in emerging markets have started businesses to contribute positively to the society. And they actually see a lot of resonance when we talk about impact investment, about ESG practices with a lot of these entrepreneurs. So there's a positive change even in the entrepreneur community.
One small question. I think you have been a multi-country fund, I understand, right? Of course, leapfrogging, of course, ESG is also another part, by benchmarking and learning from others. Is there anything that you have seen elsewhere in the world, and perhaps you would like to see that we see in India as well, in case if that is any? And um, are portfolio companies, that some countries more enlightened than the other ones, or some kind of balancing, so we can learn? What can we learn from your global experience, if there's something to learn?
Sure. No, so as an impact fund and as a pioneer in the space, our focus and our approach is to be a driver of global thought leadership and a standard setter rather than a taker. So, in our impact strategy, we go much beyond exclusion based investing to enabling capital to be deployed to benefit all stakeholders. Now, this involves active engagement at the board level to ensure that companies are not just ESG reporting and compliant, but also thinking about positive impact to the stakeholders. In terms of our approach, being a global fund, our approach to ESG is universal. So we require all our portfolio companies to adhere to national laws, to our responsible investment code, our investor agreements, and also to adopt international best practices. And it's worked well for the companies as well. Here I could take an example of one of my portfolio companies, Ascent Meditech. So Ascent Meditech, it's a manufacturer of branded orthopedic soft goods and wound care products. Post our investments, we helped them in constructing a new manufacturing facility. We could have complied with local laws, but at the board, we decided that we would meet international standards while doing the same. We helped the company in navigating towards the IFC standards. And as a result, now the company is reaping the benefits of it. It's now been supplying these same products to global retailers who insist and are quite happy that these quality standards are being met even in the emerging markets. So those are my 2 cents.
One small thing, we had an experience ourselves at one point of time. One of the large insurance companies in the US, they were looking for law firm, and uh, we're doing all the work, okay, fine, as usual, going on. But their general counsel came to visit us, and uh, we went around. And so you're a majority women organization, so you're a preferred supplier, and so the buyer behavior also is very important today. And I believe you drive some of those things as well into your model, if I'm not mistaken, somewhere along the line. So I do not know, but uh, how do you drive that awareness amongst different companies, especially who are the buyers of the services or products, that are they ESG compliant? Is it something that could be done, or is there something happening around?
No, so in terms of awareness itself, even in the buyers community mostly in the developed world, there is increasing demand for the companies in the supply chain to be ESG compliant. While implementing the ESG policies, we always start with what the company has and then build processes that are aligned with the existing roles in the business. So let's take the example, let's say, of a financial services firm. What would typically happen is the ESG competence within the firm is usually dispersed. So considerations in lending and investment decisions, they would be under the underwriting team, the social issues related to client protection and awareness, they would be with the sales and the customer experience team. The employee related matters would be with the HR, and the governance related matters would be with the CEO or the company secretary. So when we get into the company, we ask the portfolio companies to bring all these responsibility together under an ESMS program and appoint an ES manager to ensure that sufficient capacity and resources are built in the business themselves. And once these capabilities are built and the companies has demonstrated uh, ESG compliance, there is automatically a set of buyers, both on the commercial side as well as strategic investors and buyout funds who see the company more favorably.
Thank you. I think we need to create some kind of forum, or to get some kind of guidance for the buyer behavior, to incorporate ESG. Of course, it is done on individual basis. I've seen a lot, and mostly in the West, I've seen a lot of awareness. But we also need to create that kind of some kind of uh, forum for that purpose as well. And I'm so sorry. I'm sitting in Dubai. I'm getting a little lost on my time. But how are we doing on time? How much time do we have? Anybody can tell me?
Nishad, we're 20 minutes more.
20 minutes more. Thank you so much. Thank you so much. So Dhanpal, I I would love to hear from you. Just launched ESG fund, US dollars, $750 million. And can you tell us a little bit more about it and your experience with LPs, particularly in relation to ESG theme uh, that you have focused on, or anything special you came across, or some experience sharing?
Sure, thank you. And thank you, everyone. I think it's been a great kind of a session so far. I've learned a bit. Hope the others have too. Our fund, when we launched it, had a more specific agenda. And really, the agenda was around climate action. This was largely driven by the fact that what we were seeing in the area of global warming and the context of what India is doing within the global climate change program, there was a need to catalyze investments to focus on climate positive businesses, and the need for capital was very, very significant. The estimates are that anywhere in excess of $2 to $3 trillion of capital is required just over the next decade to meet our climate objectives, which as a nation we are focused on. In the COP26, as you may have heard, India announced its net zero targets, where it is defined at 2070. And one of the challenges with the Indian climate situation, as against most of the developed markets, is that India is yet to peak in terms of its energy requirement. And peaking of energy requirement is only likely to happen by 2040. So there is a need to significantly invest in meeting the energy demands of this country. On the other context, if you look at the geopolitical situation and India being largely an oil dependent economy where we import 80-90% of our oil and gas requirements, there is also that entire aspect of how do we reduce dependence on oil and gas and other fossil fuels while catalyzing and mobilizing kind of investments in clean energy. So really, we took that as the challenge and said, look, let's try and focus on climate as the key element, which is the E in the ESG aspect, and focus on energy transition and circular economy businesses as the two sub-themes under this strategy. So Eversource Capital's fund, which you talked about, has, I would say, pretty much a set of LPs which have this broader agenda, which is very aligned to the fund's own strategy. And therefore, I think the first very important aspect of this fund, which is that we have significant, pretty much, I would say, universal consensus amongst all our LPs in terms of what we want to do. There is a significant support and backing of their capital. And beyond this, we believe that there will be significant co-invest capital and debt finance, which will follow on the basis of this capital that has been raised. So our estimates are this should in all catalyze somewhere in the region of $4 to $5 billion of capital overall that this money has been put to work. Now, this is a drop in the ocean and compared to what I told India needs, but I believe it's an important beginning, and we expect that there will be tens of funds like ourselves who will want to come in and participate. Anita, through her investments in various clean energy businesses, Anjali, what she's doing at the clean tech at the startup level, Vikram has a much more broader impact agenda, but he's also, I know, very interested in this space. And I do believe that as a group, we are all very aligned to make this a reality. Mukund and whatever he's doing clearly in evangelizing this whole concept. So capital and purpose in our mind is very much integrated. And one of the things we did as we wrote our investment processes is made sure that ESG is fully integrated into the entire part of the investment process. So literally from the time we identify an opportunity to the time we eventually complete diligence and make the underwriting commitment and make the investment, to finally even having a full, what we call a impact plan, which is agreed with the company, integrated into the company's policies and processes. Organizations are created within those businesses where they aren't, and where they are bolstered. And finally, a measuring and reporting mechanism, which allows us to ensure that there is objectivity in the process. And it's not just I would say, broad kind of a thematic check boxes that we are basically checking off on. I would say this has been a very, very fulfilling journey. We've been doing this for the last few years. And the question you had on the LPs, it's just been very, very eye-opening for me personally. The world, and I think the investors, as Anita rightly said, capital talks. And the fact that investors are willing to lead with capital and walk that talk of driving impact and change through these strategies and backing GPs like ourselves really indicates that there is a very clear purpose with which the world is now moving capital across various strategies, especially what we are seeing in the alternatives and the private capital space. Two is that they do bring in significant amount of global learnings and are very, very adaptable to what India needs, right? My, again, focus being India, and given that we're putting a lot of capital work in India, there is a need to adapt. There is a need to understand what the on-ground situations are and the realities are. And how do you basically create the right strategy such that the capital becomes an enabler and not becomes a hindrance in the flow of things. And finally, I would say it's just the incredible groundswell of action that we have seen between what we call the four C's: the citizens, the corporates, the capitalists, and finally the country. We've seen each of these stakeholders really come forward in wanting to make this change happen. And that, in my view, as Anjali rightly put it, is really the next, decadal, 2-decadal story, maybe even longer.
Yeah, thank you so much, Dhanpal. Let me turn to Pragna. You are very much on the ground and you really tick mark everything, right? I understand that, and benchmarking as well. So could you just tell us, how do you benchmark the performance, and how should portfolio companies prepare themselves, from ESG perspective,
So, fantastic panelists, co-panelists here really brought the narrative together beautifully over here. Starting off with Mukund, to your point about materiality, actually, that's where we start. Fortunately, unfortunately, for most of the non-listed entities, there are, other than our own proprietary ESG strategies or ESG benchmarking, our internal way of doing it. We really do not, there are no external industry standards or benchmarks available for non-listed entities to be able to have an external validation of their ESG performance. So you do have the B Corp certification, for example, that a few companies have, that's probably the most widely used benchmark. But that I do think is the biggest gap in the market for our portfolio companies. What we have done is we've tried to fill this gap by partnering with the S&P Group to use their CSA methodology. So the same questionnaire that is sent out to listed companies for their annual sustainability scoring, we've adapted that for our portfolio companies. The challenge when you're running a portfolio across, it's digital technology-driven companies. However, they're across multiple different industry classifications in the real world classification. So even the GIGS classification, for example, has not been able to keep up with the fact that a fintech platform, if it was a brick and mortar physical service provider, it would be in the multi-sector financial services classification, and is now being put onto internet and software services, which has different materialities than food delivery that we also invest in. So really, first, we started off with identifying materiality. What is material to you? What is your carbon intensity? And to your point, Anjali, before, absolutely, the climate, even though cement, steel, all the known capital intense industry sectors, there are different, from the IEA as well, there is a different calculation methodology. They are given more of a leeway for their carbon reporting simply because they're needed. So we may be less carbon intense because we're an IT investor or digital technology investor. However, we are also reliant on those carbon intense sectors to be able to function for ourselves. And then, of course, you have the IT sector being almost surpassing the aviation sector in their contribution to global GHG. It's, I think, 2% already now. And if unchecked by 2040, it would be 14% of the total carbon impact of the global carbon impact. So for us, what we do is we first identify our risk appetite for regulated or controversial sectors. So as a digital technology platform, whether it's investor, whether it's fintech, whether it's food delivery, whether it's e-commerce, classifieds businesses, which is inherently circular, there is an opportunity there for exposures, direct or indirect, to sectors such as tobacco, pornography, cannabis, in some jurisdictions, alcohol, and gambling very often as well. So what is our appetite? How much would we be comfortable with articulating our shared value system? Because that can be really different across your own board, depending on personal preferences and personal beliefs as well. So really, first, starting from there, what is for us comfortable for an exposure level? And then we set a shared cap on that, direct or indirect, for each of these sectors within the scope of the investments that we in our portfolio. What we also do is, so we run a screening twice. First is in the pre-investment phase, of course, driven by this appetite for exposure to these sectors, but then specifically on climate action, even though it is not relatively material for our sector, it is highly indexed in the world around us, and there's so much of scrutiny. Whether it's capital inflow, whether it's capital outflow, we have to have a stance on it. And from that perspective, we then try and we actually take a very strong approach with our investees. Very often we see it doesn't really, we're preaching to the converted. A lot of these startup founders, as you were saying, Vikram, before, are visionaries themselves. They're millennials themselves. They are very much on that charter themselves. So it's more just providing them with enabling tools for them to start understanding what is their footprint, supporting them on designing their net zero pathway and committing to science-based target goals. So that is how we approach and try and benchmark. And it's very seldom that a poor performance would lead to us. It's more a conditionality for post-term sheet uh, engagement, really, that we set in place. So that's the approach that we take.
Thank you so much. Let me turn. We have 5 minutes left. Two questions. Maybe Mukund, we can start with your global perspective, but all of you are welcome to share. Has Russia-Ukraine war diverted attention from this whole thing on ESG to something else? And political or the distractions have happened. Each country is now trying to you know think in its own terms. I do not know, but do you see how do you see that unfolding? And everybody else is welcome to even comment on that. Other question I have is that now we are seeing number of provisions in the law, whether it's SEBI or CSR and other kind of thing. Do any of you have any suggestion or any comment on that? Those are the two quick things that we can, discuss. We have about 4.5 minutes, but maybe hopefully organizers will allow us to give us a minute or two more. I don't know because it's Indian Standard Time, US stretchable time. Okay, very quickly. Thank you.
Sure. Let me take the first question very quickly and then hand over to the others. On the Russia-Ukraine conflict, obviously, in the very short term, there's going to be a huge impact on the environment itself, a big part of the ESG, what you're seeing happening and playing out the war itself. Having said that, nature is resilient. We've seen that in one of the areas, in fact, in that same territory, Chernobyl, after the nuclear disaster, actually nature has come back with resounding strength in the last 30 years. So nature is resilient, providing we leave it alone. The second point I'll make is, number of brands that have been pulling out of Russia in the last few days, I think understand that there are reputational consequences for seeming to be associated with something that is actually not sitting well with the international community. The third point I'll make is the speed with which the international community, guided obviously by major players like the European Union and the United States, has moved on this issue, I think gives you both some confidence about the future, but also some concerns about how they will react on issues like climate change as you start seeing more and more frequent extreme climatic events. And I think the European Carbon Border Adjustment Mechanism, for instance, is one of the things that gives you an indication that countries like India, if we don't embrace the same agendas, might also in the future be victims of this kind of perspective on whether you're part of the program or you're standing outside of it. So I think lots of learnings from what's happening currently.
Thank you so much. And anyone else would like to comment? Because whether any sense on whether private equity should invest in defense industry or not? At least to war. Anyway, I leave that question to you all. I don't want to put you on the spot. But I think that is one kind of thing. A lot of profit, but at the same time in war, no country wins, only companies win, right?
But Nishita, just to add and emphasize what Mukund has said on the carbon pricing, and I think there is a huge amount of work required to be done in India on this, because very soon the world is going to start pricing carbon across its own businesses, across the scope 2 businesses, supply chain, and even amongst the larger communities in which they operate. And Europe has taken the lead, but I do believe that India needs to start thinking ahead of the curve and start putting in regulations in place today. I do believe that will help, again, mobilize a lot of capital, because the world is looking at this very seriously. And we should be, as in many, many other areas, take lead and really set the tone of how we think this should be priced and how the adjustment should be done between the carbon offsetters and the carbon emitters.
Thank you. Anjali, Anita, Vikram, anyone, any more comment on that? Okay.
Just to your point before on whether private equity should be investing in weapons. If you haven't, from a listed company perspective, you have an exposure to Lockheed Martin. You can cap your exposures. Whether from a private equity perspective, in our digital technology investments that we have on classifieds businesses, there is very often an opportunity for sales of guns, personal guns, and ammunition. And then again, it's about deciding for yourself what that appetite for that exposure is.
Yeah. In fact, one thing that worries me the most, and we're doing a lot of work on a global basis, is autonomous weapons. We are so excited about autonomous vehicles, but I think we are going towards autonomous weapons. And some of those things, I think, as industry, which is focusing on the ESG, we should be very mindful and create more awareness about global treaties or otherwise. How do you limit exposure to those kind of things? That would be one of my suggestions. But I think we are coming very close to the end of our session, if I'm not mistaken. And if somebody has to make some point, feel free. I don't want to take time away. But anybody else, or we call it a session, right? No, it's been wonderful. Thank you so much, Rajat. In fact, if you can share our paper on ESG that we run, it gives you all the basics and other kind of things. So those who want to educate, and maybe we'll be able to, with IBCA, we'll do a lot more things as well. But if somebody could just put that screen on the screen, that would be good. If you can't put it, then we'll make sure that we circulate separately to all the participants who have attended this. I cannot thank each one of you anymore. You've been so wonderful, great perspective and great education, including myself. I have been greatly educated today, and very, very happy to have you all. So thank you very much. Thank you, Anita. Thank you, Anjali, Mukund, Danpal, Pragna, and Vikram coming and joining us today, this afternoon. Until that, Orua or Sayonara. And
Thank you very much.
see you
Thanks,
in
Nishit
Lord.
Bhai. Thanks
Nishit
for
Bhai,
moderating
thank
this
you
one.
very much
Thank you.
for a
Thank
terrific
you.
session.
Very nice. Thanks a lot. Great.
Thank you.
Okay, so let's leave it. Thank you. I can see a lot of people thumbs up. Oh, people are loving this session. It's like, okay. Goodbye to everybody. Thank you.
Thank you.
So I think we can exit.
Thank you. What an engaging panel. Thank you, Nishit Bhai, for the lovely moderation, and all the panelists for your extreme